CNBC special report. Markets in turmoil tonight, 8 p.m. Woo! What a wild day in the markets, that is for sure. Look at a heat map here, just how much blood was spilt out on Wall Street. Apple, Microsoft, Google, Amazon was down almost 8%. Tesla was down almost 9%. Taking it on the chin there. If we look at year-to-date performance, you're starting to see these mega caps really start to bleed out. And now we have CNBC obviously coming on. Markets are in turmoil, and this is probably just after yesterday, pumping the markets up. We're going to talk about, what I see kind of going on in the marketplace. Going to keep today's video more short and to the point. You're watching the Stock Market Brief Show. My name is Michael Silva. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's episode is brought to you in partnership with Interactive Brokers, the #1 trading platform with many, many awards. If you want to learn more about them, link in the description below and also pinned there right there in the comments. Let's get into today's show. All right, everybody. So welcome back. Yes, big down day in the markets, right? Everyone was stoked and bullish and posting all their bullish charts yesterday, and today everyone's back to being extremely bearish. The market volatility is high. We discussed it. I'm not going to get way too into all of this stuff. We just got to be careful here, okay? What were the leading sectors? All the leading sectors, everything was in red, but we have utilities. Energy is still poking its head up there. Consumer staples, healthcare, real estate. So defensive posturing, once again, VIX, it's right there, back up above 30. So what really drove these markets down? Well, the 10-year yield started exploding higher once again. It's up 6.2% on the week, and it closed above 3%. That's a 30.66 here looking at the TNX. So that is obviously applying pressure on the markets. And if you just take a look at volatility, right, we're closing above 30 once again. VXN, which is NASDAQ volatility, it's pushing 40. Okay, we closed at 37.19. RVX, which is Russell volatility. These were some of the shorts that I was discussing yesterday, but once again, we're pushing that 40 marker again. We're above 35. What does this mean? It means to be very, very careful here in these levels. If you are trying to trade individual stocks, everything can get hit when these volatility indexes are floating above these, 35 and pushing 40 ranges. Okay, so we're still there, which means that the markets are still going to remain very volatile. Now, if we take a look at the safety trade of what's going on from a relative basis to the, relative to the S&P 500, where we look at gold, utilities, consumer staples, TLT, defensive, XLV. I like to keep an eye on this. And you can still see here, right, they slow down a little bit, but they're still, on a relative basis, still pointing up for the most part, other than obviously TLT, right? TLT over the SPX. TLT has been getting completely hammered, being that the 10-year yield, right, keeps on going up. But consumer staples is still one to watch. Utilities still one to watch. I still believe gold is one to watch. All these more defensive posturing, even though that they were down, look at here. Utilities was down 1%. Right? The S&P 500 was down almost 4%. So you tell me where the money was safer to be. Was it safer to be over here, down towards the bottom where the three horsemen were just bleeding out completely? Look at consumer discretionary is down almost 6%. Technology was down 4.8%. These are some big moves to the downside. If we take a look at what happened to gold, gold was slightly up there on the day. It looks like it's just doing a back test here. We'll see if it can hold. This is not the greatest looking candle. If you zoom in, right, shooting star type candle, maybe it comes down. But I think as long as we can hold, above 1800, I'd prefer above 1850. If we can hold 1850, I would like that a lot better. But as it stands right now, I'm still bullish gold, right? We're putting in higher highs, higher lows in the shorter term. Oil is still extremely volatile, so be very careful here on individual oil trades. It looks like we're breaking out and it wants to head higher, but at this particular point in time, honestly, I'm just hesitant. I'm just very hesitant. We have a shooting star type candle. It's pushing these prior areas of resistance. All right, so if we start breaking out, it opens the door to go higher. That's for sure. And it looks like it's breaking out, and it's in a bullish context. But I'm just not quite convinced yet, given where the market currently stands. Okay, now I want to kind of just hop into weekly timeframes, right? We saw a huge up day and then we saw a huge down day, but where do we stand for the week? We have one more trading day left. I want to remind everybody, ease everyone's nerves here, all right? We're actually up on the week, all right? So markets are in turmoil, but we are actually positive on the week, okay? And we're forming actually a reversal type candle. Now, I don't think that this reversal type candle is going to mean much, but we'll talk about that more depending on how the week closes out and when we get into more of a weekly recap. But I do want to call out that, hey, we're still positive. Okay, we are still higher than we were at the close of last week. And not only in the SPY, but we're also in the IWM, slightly up, right? Or pretty much flat. And then also the Qs were relatively flat to slightly down. Okay, so we have a big indecision type candle, and these type of candles do sometimes spark reversals. It just shows you here on the move down, you have big authoritative candles on the way down, then all of a sudden the body gets very small, indicating that there could be a shift in change. It could be indecision. It could be just a pause, go sideways and, fall further. But it does show that, hey, the bulls did step up. But really, we're going to look at the smaller time frames to really determine what's going on, because I do see some interesting things taking place. All right, so if we take a look at the SPY, this is the S&P 500. All right, so we tagged this around this 430, right? We hit that upper risk range. What happened? I was looking for a gap up or a move up higher to really start pressing shorts. We didn't get that, unfortunately. We got a gap down, and it completely collapsed down. So to be short, it made sense, right? We discussed that yesterday. But what I do find interesting here at that 430 level, I want to point out on the 15-minute time frame. On the 15-minute time frame, you can see it a lot more clear. We came up, tagged it, came up, tagged it, came up, tagged it. How did we get there? We got this end-of-day rally, end-of-day rally, end-of-day rally. And then what happened the very next day? Gap down, sold off, gap down, sold off, gap down, sold off. Now, interesting price action overall, right? We're just going sideways, but overall, like through this little area. But I'm thinking here is if we can get above 430 and hold that, that's going to open the doorway to head a lot higher. I feel like this 430 level, for whatever reason it is, when it comes up here and seeing these gap downs on the after hour markets is very interesting. And then also this tells me be careful at end of day ramp ups. As it stands right now, because they are getting faded 100%. They are bear market rallies. As it stands, we're still below that declining 5-day moving average. What do I think is going to happen? Honestly, coming into Friday in overextended areas, I can see us rallying up a little bit, but I can see that getting faded. It's a very... I'm not feeling too convinced of any particular trade here. Yesterday, I was pretty darn convinced of a short setup, and we got that. And right now, I'm a little on edge, being that volatility is so high. So I'm hesitant to actually make any good trade ideas based off of the current chart that I'm seeing here on the SPY. And if you take a look at the Qs, right, we got above that risk range, we gapped down, we opened, and we just rolled over for pretty much the entire day. And look at that volume that stepped into big decisive, distribution type day today, and it took out the low of the prior day, and it even took out the low of this low candle. So we actually created another new low there, which is, takes away from the whole follow through days. So it's, once again, the trend remains to be down at this particular point in time. So sit on your hands or be very tactical. This is just how the market is acting right now. If you look at the 15-minute time frame, very similar to the SPY where we ramped towards the end of the day, right? Those are end of day rallies, and then we gap down, boom, sell off, gap down, boom, sell off. So be careful of those end of day rallies, especially for some reason into this 330 level. The 330 level has been holding as resistance. So if we can get above these levels, that can open the doorway for some more possibilities for the bulls. But as it stands right now, the market's still in turmoil. The IWM, okay, IWM was one of the more, one that I was focusing more on as far as the shorts go. Down 4%, right? So if you took that short, hopefully you covered, hopefully you took some, right? Not to say that it won't go down further, but I mean, the setup was very obvious and very good because of volatility high. We're at the upper risk ranges. This one's already been getting beat down. It made a lot of sense. All right, if you look at the 15-minute time frame, we'll go over to that. All right, now that it's already down 4%, right, you missed a lot of that move already. So as it stands right now, once again, we came back to that volume shelf profile. Okay, so what does this mean? It means, if you didn't take the trade, just wait until something else sets up, because right now as it stands, we're just ping-ponging around here in kind of like the, just ping-pong zone, right? So until something sets up is when I'll feel more confident, but as it stands right now, we can come right back up to 189, 190, float around just like we've been doing here, all right? So there is not really a great trade going into Friday, unfortunately, and hopefully something changes. Now, overall, so being that it was such a big sell-off day, if we get a gap down tomorrow, look for red to green. Okay, so that's what I will say. And the reason why I say that is a strong possibility of maybe seeing some upside potential is the only reason is because of how much we sold off. And if we look at like indicators such as the advanced decline line, I mean, look at this, minus 2,500, even more than that, right? Minus 2,538. That's pretty overextended to the downside. You can see these pink circles every time we hit those low levels, right? We saw some rallies take place. So, things are pretty fried to a crisp right here. But overall, if you look at the summation index, right, we're still in a downward trend. Okay, the summation index right here, still pointing down, right? The parabolic Saylor is still, floating above it. We got to wait for this to start ticking below it to feel more confident for holding longer term. By longer term, that could mean a week. That could mean a couple of days. I really don't know in this environment, unfortunately, especially when volatility is high. But I will point out this, right? The market has been pressing lower, and I will say that actually, even on today's low, the NIMOT is actually putting in higher lows right here, which is actually a bullish divergence taking place. So that is something to track going into, obviously, tomorrow's trading session. And then if we take one more look here, this is the old fool indicator. You can see here, it is still pointing down, right? We wait for the green line to cross above the blue line, and we want to see it start trending up. You can see when it crosses down below, well, we see more sell side action, crosses down below, more sell side action, crosses down below, chop, 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 sell side action, okay? Until we start to see this start curling up, start heading up higher, we can feel a little bit more confident of, maybe getting a little bit more aggressive on our long positions. But as it stands right now, the market, just like CNBC is saying, it's in turmoil. So be careful out there. All right, everybody. Hope today's video helped out. I will be making just to conclude, I will be making a weekly recap. I don't know for sure if I'll be able to get it out tomorrow. I'll be traveling tonight, and for the rest of an entire week, I'll be floating around. So I'll have my equipment with me. So I will be posting when I can post. So I'll see you all back here on the next episode. Bye.